Do you too want to buy an electric vehicle, but the sky-high prices stop you from having them? We have good news for you. To maintain its supremacy in the market of electric vehicles, Tesla Incorporated has slashed prices globally on its electric vehicles by as much as 20%, extending an aggressive discounting effort and challenging rivals after missing Wall Street delivery estimates for 2022. This is at least the fourth time the automaker has discounted its vehicles or offered credits in the past several months. The price reduction trend kicked off in October when Tesla announced price cuts in China up to 9% on the Model 3 and Model Y. Earlier this month, Tesla reduced prices for Chinese buyers again, this time by nearly 14%. The company has also tried to woo US and Canadian buyers with price reductions. Tesla in early December offered US buyers a $3,750 credit toward a Model Y or Model 3 if they had their vehicle delivered in December 2022. In the last week of the year, the automaker upped that discount to $7,500, according to the company's website. Tesla has turned its attention once again to the US market. The company updated its website last Thursday with new prices for US buyers. The long-range Model Y crossover now starts at $52,990, not including fees, a nearly 20% drop in price. This new, lower base price is important because it allows buyers to qualify for the $7,500 federal tax incentive. Only EVs priced below $55,000 qualify for the tax credit under new terms established in the Inflation Reduction Act that was signed into law last August. Tesla also reduced the price of its high-performance Model 3 sedan by 14% to $53,990. Tesla's oldest and most expensive vehicles, the Model S sedan and Model X, are also cheaper, although the two vehicles are still far above the $55,000 price cap. The price reductions come as Tesla faces more competition from legacy automakers, startups, and, in China, giants like BYD. The price cuts will make the Model Y the best-selling electric vehicle in the US, eligible for the tax credit of $7,500, making it more competitive as demand for electric cars continues to increase. Tesla stock dropped on the news, but analyst Daniel Ives of Wedbush says Tesla is playing the long game. This is a clear shot across the bow at European automakers and US stalwarts, GM and Ford, that Tesla is not going to play nice in the sandbox with an EV price war now underway, Ives wrote in a note. Margins will get hit on this, but we like this strategic poker move by Musk and Tesla. Musk had signaled on an earnings call last fall that price cuts could be coming sometime in 2023. Tesla stock plummeted in 2022 for a variety of reasons, including CEO Elon Musk's apparent distraction as he focused on his purchase of Twitter. Among the price cuts, the Model Y long range, the cheapest version available, will now have a base price of $52,990, a drop of $13,000. That brings the price below a $55,000 price cap required to qualify for the revamped federal EV tax credits, giving it an effective price for eligible buyers of $45,490. That's well below the average price for a new vehicle in the US. Previously, only the three-row Model Y qualified for the credit because it qualified for a higher price cap. Other models were also cut. The Model 3's base price was cut by $3,000 to $43,990, or $36,490 after the federal tax credit. There is a caveat on those federal tax credits, though. The eligibility rules are set to change in March, and there's no guarantee the vehicles will still qualify, and no guarantee that a custom-ordered vehicle will arrive before the rules change. Customers intent on getting a tax credit for the Tesla or any other electric vehicle may want to focus on vehicles available for purchase today, rather than waiting for an order. The price cuts came as major automakers are releasing more electric vehicles, especially on the cheaper end of the market, cutting into Tesla's overwhelming dominance. The move marks a reversal from the automaker's strategy over the last 2 years, when new vehicle orders exceeded supply. It comes after CEO Elon Musk warned that the prospect of recession and higher interest rates meant it could lower prices to sustain growth at the expense of profit. Musk acknowledged last year that prices had become embarrassingly high and could hurt demand. Shares ended down 0.9% after falling as much as 6.4% on Friday. Last year, Tesla stock had its worst year since the company's inception due to slowing growth in China and Musk's distraction with Twitter. Tesla lowered prices across the United States, Europe, the Middle East, and Africa, following a series of cuts last week in Asia, in what analysts saw as a clear shot at both smaller rivals that have been bleeding cash and legacy automakers aggressively ramping up electric vehicle production. That's a major factor driving Tesla's aggressive pricing, along with supply woes that are finally easing and the new government incentives that are kicking in. More broadly, vehicle affordability is a major concern for the auto industry right now. A spokesperson for Tesla Germany said lower cost inflation was also a factor in reducing prices in its top European market, without specifying which costs had fallen. In Germany, Tesla lopped prices by about 1% to almost 17% on the Model 3 and the Model Y. The best-selling Model Y will now go for €44,890, $48,499, down €9,100. It also reduced prices in Austria, Switzerland, and France. In France, customers buying the Model 3 for €44,990 will now get a further reduction, though a government subsidy of €5,000 on an EV scheme with a threshold of €47,000. Companies have been making extraordinary amounts of money as a vehicle shortage sent prices sky high, but they also know they are driving away would-be buyers who simply can't pay $50,000 for a new car. The average transaction price for a new vehicle these days is $49,507, according to the latest figures from Kelley Blue Book. As supply chain woes start to ease, the number of vehicles available for sale is starting to rise. Analysts are watching to see which automakers respond by cutting prices and chasing market share. And Tesla can move much faster to do that than its big rivals. Most automakers set the suggested price for their vehicle by model year, and consumers then negotiate their actual price at a dealership. Tesla, on the other hand, set prices directly on its website with no negotiation, and changes those prices whenever it likes. Competition is coming, and they're responding with price cuts, said Thomas Hayes, chairman and managing member at Great Hill Capital. The discounts may make EV cars affordable to people who were previously priced out of the market. US and French buyers could take advantage of both the discounts and federal tax credits available in both countries for certain electric vehicle purchases. Deutsche Bank estimated that a Model Y, after tax credits, could be $18,000 less than Ford's rival Mustang Mach-E. Tesla's vehicle gross profit margins, which are among the highest in the industry, would drop 3 percentage points in 2023 versus 2022. It estimated, but Tesla's bold offensive move secured growth and put competitors in great difficulty, the broker said. While Tesla shares fell, stocks of rivals were hit even harder. US automakers General Motors Company and Ford Motor Company fell 4.5% and 6% respectively, making them among the biggest losers on the broad market S&P 500 index, while in Europe, Stellantis NV fell 3.7% and Volkswagen AG dropped 3.6%. Wedbush analyst Dan Ives said the move could boost global deliveries by 12% to 15% this year and shows Musk responding to growing competition. Tesla fans and customers complained the price cuts disadvantaged those who had recently bought a vehicle. Greg Woodfill in Seattle, who bought a Model Y in December, had considered waiting until the new year to get the US subsidy, but was lured by a discount at the time of $3,750. The Tesla fan, who had previously owned a Model 3, said he was disenchanted with Musk's antics, but decided to buy a Model Y because he loved Tesla products. "It's a punch in the gut, to be honest," he told Reuters on Friday, adding that it feels unfair Tesla sought to boost fourth-quarter sales with discounts only to cut prices even more a month later. If they knew they would drop the price this much, they should have just done it in December. In China, where Tesla cut prices last week by 6 to 13.5%, owners protested at delivery centers, calling for compensation. For 2021, the United States and China combined had accounted for about 75% of Tesla sales, but it has been growing in Europe. Tesla cut prices in China and other Asian markets last week, which analysts had said would boost demand and increase pressure on rivals, including BYD, to follow suit in what could become a price war in the largest single EV market.